Hello, Option Strat traders. Steve Gans here, sharing another paper trade with you. So this trade is going to be in Amazon, and let me explain the premise behind this trade for you. So this is a chart of Amazon. Each bar represents 1 day in time, and there's been earnings reports multiple times here, and we've got earnings coming up next Thursday on 4/27 after the market close. Now, we can see that Amazon had pulled back into this 102 to 105 range a number of times, and then a couple earnings sessions ago, it plummeted through that. Then it came back right up to that same point. Now, this is kind of called technical analysis. We kind of look at a line here where psychology has shifted around on Amazon. So once it broke through here, then when it rallied back up, people started thinking, it's hitting that resistance area, I'm going to sell it. Then it came back up to that resistance area. It did pop through it briefly the next day on earnings. That's the last earnings. But then immediately fell back through it. Now it's showing some strength again, and it's starting to pop up through that zone. So, and again, we have earnings coming up next week. So the question is this going to be a sustained new breakout for this? This pattern, by the way, many people will call they'll call it a cup and handle. So this is the cup, this is the handle. Now this is a fairly good sized handle, but then you also have another cup right here, and this is the handle. So cup and handles tend to break out to the upside. That's considered a bullish pattern. Of course, there's no guarantees on this stuff. It's just going back and looking at technical analysis, what traditionally happens. Each one of these bars basically is some psychology of a group of traders, and that psychology helps give us some insight into where the market might go from here. Now, let's take a look at how I'm going to look at this in Option Strat. So I want to come in, and I looked specifically at flow summary. And I want to come in, I want to look at flow summary on Amazon. So let's just narrow this to just Amazon. Let's go look at a little historical flow. Let's go back maybe a week or so here. We'll go back to the 14th. And Amazon, and I really just want to look at the upcoming expirations. Let me look at the expirations that are in the next 14 days or so out. Let's just search those. And we can see we're pretty darn bullish, okay? So there's a fair amount of bullish sentiment, people thinking that, Amazon is more likely probably to go up than down, based on these people's assessments, and they're putting their money where their mouth is. I mean, we can look right here, April 28th, next Friday, someone is using $2.48 million of premium to buy long calls. So that's a very, very bullish sign right there. That's a big number. There's a lot of other bullish numbers here that we can see as well. There's a few bearish numbers scattered in here too. Let's be clear on that. But overall, the sentiment is considered bullish sentiment. So this kind of supports our thesis. So how can we potentially put a trade together here that would at least not have upside risk if we do get that breakout, but also have a little bit of a margin for error if Amazon were to pull back to the downside, say back down here to this $100 range or so. So I'm looking to develop some sort of a trade that might be able to handle that sort of a thesis. So let's just take a look at how I might go about doing that. So I'd come in here to build, or maybe even optimize might be better. And my premise isn't necessarily very bullish, although the market and the market sentiment does seem to be very bullish. The position that I want to build is more going to be just a bullish sort of position. And how would I want to do that? Well, there are some different bullish positions here. But there's also one that I'm not seeing here, which is actually what I'm wanting to do. I'm wanting to do this in the April 28th expiration. So let's go to that, and let's just see neutral. Maybe my, nope, it's not showing up here in neutral either. So I'm going to build this out. What I'm going to do here is it's going to be a broken wing butterfly. So this is going to be a put broken wing butterfly. That's the trade I want to go with, and you'll see why here in a moment. So again, we're currently trading at around $108. So let me bring my short strikes back here to around that $108 mark. And I want a broken wing fly, and what that means is that I will have some ability to take some downside heat before this trade gets into trouble. But I really don't want it to have much heat to the upside. I want it to be able to be profitable, or at least not hurt me if the market does in fact rip higher. So I can look at something like this. In this scenario, I have virtually no risk to the upside. This is showing $7 in risk. If the market ripped up and I never adjusted it or did anything, yeah, I could potentially lose $7 in this trade. If the market dropped down, well, I've got some margin all the way down to the 102. This is at expiration. So, but I've got flexibility all the way down to 102 on this before I would really start to feel any pain. But maybe I want a little more downside room. So how might I be able to get that? Well, I could potentially do something like this, where I shift all of this down a little bit, maybe put myself in a position something like this. And notice that all of this is about deciding where I want to position my risk in a trade, where I want to position my reward in a trade. So I can slide these around, and one of the huge values in my mind of option strat is the fact that I can do exactly what I'm doing here. I can just simply slide these things around to my heart's content and instantly get an update diagram of what my P&L will look like at expiration. So let's just say I like this scenario here. Again, maybe I even want to do something like this. So again, this is a broken wing butterfly. And note, let me just enlarge my diagram here a little bit. So note that in this scenario, we're currently trading right here, right around the 108. So at expiration next Friday, if we are somewhere in this general area, I would have $167 in profit. If the market pulled back a little bit, I say the market, if Amazon pulled back a little bit into this 105 range at expiration, I could potentially have as much as $460 in profit. I have enough room all the way down to around the 100 mark to where I'm not going to have any downside risk again at expiration until I get lower than that $100 mark. And the reason I keep stressing at expiration is I don't think we're going to see a huge move in this until after the earnings announcement. So let's just pull this back and look what happens. So if we enter this today, we're essentially going to be break even. We'll be down a few dollars basically as a result of our commissions. And if Amazon doesn't have a big pullback in the next week, if it does, I mean, I could be experiencing some stress fairly fast. But usually what happens going into earnings is the stock either A, tends to run up, and of course we're showing a lot of bullish sentiment on this already, so that might be a likely scenario. As we get closer to expiration, we're going to see that this tent is going to mound up because our T0 line, this line that just moved, ultimately next Friday is going to morph into this dashed line. So if we march this out to next Thursday, now next Thursday, keep in mind, is when the earnings announce, and then after earnings announcement, that's when on next Friday, that's when this thing is going to fill out, okay? So it's probably not going to move a great deal. When I say it's not going to move, our T0 line here is probably not going to move a great deal until maybe next Thursday or certainly next Friday. Next Friday, it's going to do this for two reasons. One, after earnings are announced, all the volatility is going to come out of this, number one. Number two, on Friday, that is expiration day, so that's when it's going to take on this shape. So what does this trade do for me? Again, at the end of the day, this trade gives me no upside risk on Amazon. So if Amazon rockets up, 10, 20, 30 points, it's not going to be a huge thing. I will have $63 in profit at expiration, no matter how high Amazon goes. However, we can also see here that if I get a little pullback into this range, I could have a much more profitable trade, but I do have risk if Amazon drops below this $100 mark. And it could be significant risk if Amazon tanked really, really hard. So again, I need to keep that in mind. I need to understand that. But what will likely happen is as time goes by, as we get into next Thursday sometime, I would look to actually pull this trade off. If it does end up somewhere in here with a decent amount of profit, I would look to pull this trade off before earnings. If I could get $100 in return on my $1,000 in risk, if I could get $100 in return before the announcement next Thursday, I'd be all for that. That's a 10% return in less than a week. So that's kind of what I'm doing in putting on this trade. I'm giving myself a number of chances to potentially win, one of them being before the earnings announcement, just through some decay here, and the next one being that at expiration, if I choose to hold this. And again, I have to understand that holding this is going to have some risk associated with it if the market tanks hard. But that's going to be my game plan here on this Amazon all put broken wing butterfly trade going into earnings. So as always, if you have any comments, feel free to post them in chat. This is a paper trade. So again, all the trades that I'm recommending, they are demo paper trades. So I'll just save this as well. And then I will share this link in the description below so that you can copy it into your own option strat and observe it as the time marches forward. Thank you so much.